Hello, and welcome to today's Treasury webinar, In-House Banking with SAP. This is going to be a Microsoft case study today. It will be hosted by Serrala. Before we begin, I have a couple of housekeeping items to get out of the way. Please note the disclaimer on this initial slide. We are a member of the AFP Association, so if you're interested in receiving professional credits, please let us know and we will give you more information about that. I'd like to tell you that there will be a question and answer session during the event. So if you can use the Q&A box at the bottom of the console to submit your questions to our speakers today. We also will have the ability to ask polls during the event. So please take the time when you see a poll come up to provide your answers, and then we'll discuss it during the session and show the results. And now it is my great pleasure to introduce our speakers today. Jim Scurlock is the Director, Head of Global Cash Management at Microsoft. He has led the Global Cash Management and Treasury Integration practice at Microsoft for over 12 years. He has over 17 years in cash management across the globe. Sunny Ho is a Group Treasury Manager for the Global Cash Management team at Microsoft. She was acquired with extensive experience, in cash flow and forecasting, cross-group project management, and e-commerce and payment. She joined Microsoft over 12 years ago after completing her MBA at the University of Washington. And finally, my colleague Peter Wolf is a Senior Vice President at Serrala. He specializes in SAP Treasury solutions and has done so for over 20 years. His experience and expertise spans the entire suite of SAP's Treasury, cash management, and electronic banking applications. And now I'll turn it over to Peter.
Thank you very much. Welcome, everyone. We're very excited about the webinar today. And I'm going to just introduce the topic here a little bit and set the agenda, identify the agenda. So today we will be covering the focus, obviously, on Microsoft's case study. We'll start out with just a short introduction of Serrala. Looking at the attendee list here, I think most of you have attended previous webinars and are familiar with Serrala, but we will do a brief introduction of our experience and background. Then we will jump into the meat of the material, managing cash with in-house banking at Microsoft. We're very excited about the presenters we have, lots of insight and experience to bring to the table here. So I think it's going to be an extremely informative session. Then I will follow up with notable solution design and deployment characteristics with an emphasis on what we see in the broader market, how we've seen other companies deploy relative to what Microsoft has delivered, how those and their approach has impacted on their solution overall. They've been implemented for quite some number of years and have continued to enhance and expand their solution. So we'll emphasize those aspects where we see the market-leading strategy that they've taken. And we'll talk a little bit about the path forward, and we will have a question and answer session at the end, as was identified by Christine. So, introduction of Serrala. We are an international organization. We've been around for 30 years, have 2,500 plus clients, over 16 offices, 700 employees focused on the areas that we are specialists in. And that area really we refer to as the universe of payments, which is really the entire financial value chain. So that's inbound and outbound payment management, accounts payable, accounts receivable, process flows, all of the aspects of managing those payments and the cash flows in Treasury, the risks, the exposures, and every other aspect around that. This is our specialty, has been our specialty. We're the only organization that brings a full-depth solution across the board in all of these areas. Today, where the particular emphasis I think we need to bring is regarding our Treasury services and our experience in implementing Treasury solutions. So we were the implementation partner of Microsoft back in the early 2000s and have continued, fortunately for us, as their implementation partner as they've continued to expand their design and enhance their solution over the last 15, 20 years. So we have over 400 project experience of 400 projects around the globe, numerous life cycles, the analysis of existing solutions where others have implemented, helping them for review, identify where and how the SAP system can be enhanced and delivered to meet your requirements. We are the largest team of SAP Treasury specialists in the marketplace and continue to lead with the S/4HANA solutions. We are not only a service provider, we also have software add-ons that supplement the standard functionality. Microsoft has some of those solutions, but it's an integration of really the system, the process, the people, and software that our experience, we believe, helps us to deliver and help our clients to achieve the greatest efficiency and optimization. So with that, I'm going to now turn it over to Jim and Sunny, specifically to talk about their experiences and their market-leading solution in managing global cash with in-house banking. Jim?
Perfect. Thank you, Peter. And hi, everyone. I first wanted to thank Serrala for hosting the webinar and all of you for attending. This is such an important topic for us at Microsoft because the in-house bank is so fundamental to how we operate. But before we jump in immediately to the in-house banking, I thought it would be helpful to share with you just a little bit about ourselves. Most of you have heard of Microsoft before, but from a treasury perspective, we have a highly centralized treasury team of about 40 people in the greater Seattle area. And we do have one treasury specialist in Singapore and another in Ireland. The way that we kind of operate today is by having a pretty centralized team. As I was mentioning, we have revenue in about 191 countries with about 450 different legal entities globally. We have in 118 countries, and the in-house banking is super important for the way that we manage this activity, and I'll talk a little bit about that in some of the comments. From a treasury perspective, I also wanted to share with you, we do about $400 to $500 billion of annual cash movements. And this is, moving funds around internally as well as, stock buyback, dividends, intercompany flows. Today, we do operate with about 1,300 bank accounts globally with about 85 banking partners. The majority of that activity is centralized with just a few cash management banks. And then there are a few variety of banks that we use for local stat and tax payments, as we do have a presence in a good portion of the countries that we are operating in. Our teams do process about 7,000 wires annually, and this continues to be on a decline as we move more and more activity through the intercompany and our in-house banking. For our trading activity, we have about 14,000 trades, so we manage the majority of our entire portfolio in-house. We do leverage, some third parties, but mostly manage the activity in-house. And our team is actively managing about $145 billion today. One thing I did want to highlight just before we walk through some of our broader presentation is share with you a concept that we call the life cycle of the dollar. It's not necessarily an org chart, but a framework on how we look at cash across Microsoft and the Microsoft Treasury teams. The first chevron is the cash management function, which I'm responsible for. And this really looks at managing the cash banking network, the cash framework of all of our worldwide entities. So it's establishing the framework on how we're going to manage cash, how we're going to concentrate it, setting up the rules around intercompany lending, funding our subsidiaries, repatriation, dividend planning, and managing just the cash management of a lot of our subsidiaries. The next group is our capital markets group, which is focused on the capital preservation. So if you think about our team on the cash management side, it's about consolidating a good portion of our cash. So that way we can hand it over to our capital markets group to invest in in their portfolio. And that's super critical for us as we're trying to figure out how we optimize the cash, specifically more and more around lower interest rate environment. The next group is our capital structure and corporate finance group, and this team is specifically focused on, our capital structure. It's returning cash to dividends, doing the stock buyback. We're one of the few companies that over the last 10 years alone, we've returned more than $200 billion to our shareholders, which is pretty decent. It's larger than most market caps of most companies. And then from a treasury operations perspective, you kind of see around on the bottom, there are two different groups that kind of are generalists across each of the different areas. One of them is our treasury operation group, which is an independent group that is responsible for managing and confirming a lot of our trades. This is our back office that is ensuring that all of the trading activity is properly updated, and they're also highly focused on ensuring regulatory reviews and meeting some of our regulatory requirements. And the last group that sits within Treasury is our risk management group. And they really have two hats. They focus on our business risks, so managing some of our insurance, capital market, enterprise risk management, as well as our financial risk management. Because we do manage the majority of our portfolio in-house, this is kind of an independent group that also looks at, are we taking the right appropriate risks? And be able to provide real-time dashboards to not only the treasurer, but also the CFO to ensure that we're complying with what the board guidelines have been able to set out for us. And with that, I'll hand it over to Sunny Ho on the team to talk about how we manage cash through our in-house banking.
Thank you, Jim. So in the next few slides, we will walk you through how we broadly leverage SAP's in-house cash center module, including some of the key functions like cash concentrations, intercompany settlement, pay on behalf, and ZDA. So currently we have around 450 legal entities set up in this infrastructure, and the number continues to grow with our growing business. So before we set up any entity to this structure, we would normally partner with our local finance, tax, and legal team to review the statutory requirements and ensure that the level of the participation is properly set up in SAP. Oh, here comes the poll question.
Hi, everybody. Thank you very much, Sunny. So we wanted to ask the audience today, do you currently have an in-house bank like Microsoft does in place? And what do you want to achieve by attending this webinar? Do you not have an in-house bank and you just want to understand the value? Do you not have an in-house bank but want to build a business case? Perhaps you want to expand the scope of your existing in-house bank, in which case today's example is an excellent example of that. Do you want to possibly find a new or better in-house banking technology? Or are you looking for ways to improve your in-house banking solution? So let's push this to the audience. Sorry, 1 second. There we go. My apologies. So we'll give you a few minutes to do that. So as I understand, you guys have had quite the journey with your in-house banking story at Microsoft. Maybe Peter, Jim, Sunny, you can talk about how you came together as a group and maybe sought out Serrala or started on this journey and looked for other partners on in the process. Peter, I think you can't hear you. Are you muted?
If I took it off of mute, technology.
Okay. There we go.
Given that I guess I was the only one, since I'm the oldest here, was around in those days, Jim. Back in the early 2000s, this is when we were E5 Solutions Group, and we were engaged, again, fortunately, by Microsoft to be their implementation partner. We've been the leader in this space for quite some time, but we were engaged in the design and delivery at that time. And one of the great things about working with Microsoft is the insight that they bring to the table and the enthusiasm for delivering world-class solutions. So from that point forward, they have really been driving leading-edge solutions, and that's why I think this material and information here is so interesting, because I think there's a lot to be learned from their experience for sure.
100%, I agree. So we'll give you another few minutes. Jim, Sunny, do you have any thoughts about since you've come on board with the process? It's been a long journey.
No, it's been great for us. I mean, we've been able to, as we were expanding our solution, and I know Sunny will hit on this in a little bit, but yeah, we definitely leveraged, Peter and the E5 team, multiple times over the years, even on brainstorming new solutions as well. So there's once you've got a solution, it's very easy to keep adding to it.
Great. Okay. Well, let's see what people said. So, about 25% want to be building an in-house banking business case. And again, about the same as for expanding the scope. Whereas finding a new or better technology or, don't even have an in-house bank yet is at about 12%. Oh, and finally, compliance management. I'm looking for ways to improve our in-house bank. So that's about 25% as well. So we have a good distribution of topics. I'll leave you guys to discuss.
Interesting.
Yeah.
No, I think, we're finding certainly that in-house banking is becoming more and more prevalent. It has been around for quite some time. In the early days, it was a challenge. The tax departments would really push back on utilizing these structures. But with market leaders like Microsoft leading the way, more and more companies are seeing that this is possible and taking advantage of it. They're missing out by not taking advantage of it. So it's good material and good solutions for them to take and optimize their overall processes. So
okay,
interesting information.
Yeah, absolutely. We'll hand it back over to Sunny.
Oh, sorry, jump twice. All right. First, yeah, I completely agree with Peter that the function has been extensively used and by us as well. So I would say one of the key benefits of the in-house care center is non-cash intercompany settlement. For example, like commission, dividend, royalty payment, and also the ad hoc cross-charge. We have established monthly cadence and centralized the functions within a team to make billions of payments on a monthly basis. And this greatly reduced the risk of wire transfer and, of course, save us some bank fees. Also, we concentrate the global cash to the legal entity that hosts the cash center, which is our portfolio entity, and concentrate the excess cash investment as well. In addition to those key features, since we maintain the excess cash under the portfolio label, there is intercompany lending and borrowing relationship. So we also use in-house cash center to calculate and post interest to each account based on the arm's length interest that we pull from the market. So last but not least, we are able to better manage our FX exposure and only provide funding to the local bank account as needed. And I will hit on that point a little bit in the later slide. Yeah. So speaking of payment, one functionality that we implemented several years ago was pay on behalf. So this means that instead of each legal entity manage the AP separately and send the bank file to their local bank and debiting use their local bank account for payment processing, we centralize the payments under the portfolio entity for the eligible subsidiaries, especially in the Western Europe region. And for us, it's both cost and process efficient because we can set up various payment methods under the pay on behalf entity and route the payments to the cheapest options that we set up. We can also reduce the FX cost because the pay on behalf entities has more than 20 currency accounts set up. So as a result, that we minimize the engineering resources need because we don't need to configure the SAP for the AP functionalities for each individual legal entity. And how you work in SAP for this pay on behalf is that the in-house care center is once the pay on behalf payment file is sent, is being generated and sent to the bank, simultaneously the intercompany entries will be triggered and posted to the entity that's ultimately responsible for this payment. So it's fully automated for us once we get this set up. Right. So the next topic is the multiple cash centers. So in SAP, you can set up multiple cash centers and link them as needed. For example, we set up in-house care center and US care center. And the rule is that only US entity can participate in the US care center and lend or borrow from it. The non-US entity can only lend or borrow from the in-house care center, which which for us is an offshore entity. But here's the one caveat. U.S. entity can also participate in the in-house care center. So that it's just the U.S. entity can only lend to in-house care center, but cannot borrow from it. And since we have all the participants set up under the in-house care center, we settle our intercompany payments in this care center. So how does that impact our process? I'm going to go through that in the next slide. So we mentioned that, hey, for U.S. entities, we can only lend but cannot borrow from the in-house care center. And we have the intercompany settle occur under the in-house care center. So what happens when U.S. entity don't have sufficient funds in their in-house care center, but they need to make payments? Well, in SAP, we are able to link the two cash centers. So then if a U.S. entity ended up with negative balance during the day, the SAP overnight job will run and transfer, we call it internal funding, between same entities, different accounts within the care center. And they will transfer funds from its U.S. care center to the in-house care center. And by doing this, it ensures that the U.S. entity's in-house care center account is always closed at 0 or above on a daily basis. And this is fairly important to us because we need to strictly ensure that the intercompany lending and borrowing are following our tax guidance.
So let me, Sunny, if I can if one thing to add on that one. So I know that somebody in the beginning slide had a question around some of the compliance and from a tax perspective. That if we think about the evolution of our in-house cash center, we started off with one cash center in the early 2000s, and then we implemented pay on behalf. But because there were many of the legal entities from a tax perspective that could not borrow from our in-house bank. So lots of the tax teams, depending on how their own legal entity structure, they can lend to a cash center, but they can't necessarily borrow without it triggering some specific IRS rules like 956 and others. And so we really implemented our U.S. cash center to ensure that we were compliant with our own tax guidance. So that way, as Sunny was saying, if a payment is ever made and a legal entity, a U.S. U.S. type entity ever was negative in the in-house cash center, there would automatically be an internal transfer between the U.S. cash center and the in-house cash center to make sure that we were compliant. And this has been really, really helpful for us to ensure that as we sit down with our tax teams, that we have all the proper controls in place. And that's been absolutely fundamental to how we operate.
Yep. Thanks, Jim. So one more functionality to highlight, and which we implemented with the enhanced feature, is multi-entity ZBA. So as mentioned earlier, we use in-house care center for cash concentrations and funding. And in order to automate the end-to-end process, including the accounting posting, we enable the something called SAP Treasury feature to tag electronic bank statement. So how it works is that when a ZBA transaction occurred between different legal entities, SAP will identify the payer and pay relationship based on the search string on the electronic bank statement and post the debit or credit transactions to the respective entity's in-house cash center account accordingly, and of course automatically. So after we launch this feature, we have put all the multi-entity ZBA on all the eligible bank accounts, which greatly reduce our local bank accounts balances. Also, trying to eliminate the sovereign's risk, and eventually automate the cash concentration and funding processes. Now I'm going to turn this to you, Jim.
Actually, we're on you, Paul. Hi, Sunny, again. So we want to ask our audience, which of the following key processes are of the greatest interest to your organization? So payments on behalf of, receipts on behalf of, intercompany payments and netting, intercompany foreign exchange, intercompany cash pooling funding, which is an excellent example that we're talking about, and intercompany cash flow loans. So we'll just open up the poll, and if you could enter your answers, that would be great. So maybe you can discuss, so how you prioritize the way that you went about choosing which are your greatest interests and how you started down that road along the way. Thanks. Go into a little bit more detail. Peter, I don't know, Jim, if you want to. Are you on mute?
As you say,
I am on mute once again. Go ahead.
Yeah.
Go ahead, Jim. I'm sorry.
Oh, I was just going to say all of these are absolutely critical for us. So.
Yeah, I think one of the things that I'm going to talk about a little bit is how the project began, with really the focus on the cash management and the pooling and the intercompany settlements, and then obviously, as Jim and Sunny had mentioned, then expanded out to the payments. Okay. So these are obviously all fundamental solutions and processes that fall under the umbrella of in-house banking. Often they're done without the concept of in-house banking, and people often question, where's the line at which you become an in-house bank from an independent standalone process? Many companies do payments on behalf, but don't have an in-house banking concept. And I think it's really about when you get to that critical mass, then you have a variety of these processes really concentrated and centralized on a few entities within the organization serving as the financial hub. And at that point, when you start managing these with an intercompany loan balancing model, that's really when you would say you're transitioning over to what would be considered an in-house bank solution.
Okay.
Yep.
Well, let's take a look. So payments on behalf of is the undisputed winner in this particular poll. Although intercompany foreign exchange and cash pooling are not far behind, receipts on behalf of and intercompany netting are a little lower. Oh, and intercompany cash
I think
flow
that's not surprising. Yeah, it's not surprising. Again, payments on behalf of many companies use that functionality and are really looking at how can they enhance that even further in an in-house banking structure to take advantage of it, to optimize. And I think also to really look at controls and risk mitigation, because there's a huge emphasis now, especially with so many people working remotely, on ensuring that the payment process is well controlled and that fraud is well controlled and mitigated, the risks of that. So the emphasis on payments on behalf is not surprising, I think.
Yeah, certainly. Okay, well, with that, we'll pass it back to Jim.
Great. So one thing I wanted to highlight is, and this really captures a lot of the items that that Sunny was talking about in the last several slides, but here was just a quick snapshot of some of the acquisitions that we have done, and we really haven't updated this since like 2016. But what I really wanted to highlight is at Microsoft, we're very acquisitive. We do a lot of acquisitions. We usually acquire a company every 3 weeks. And with that company, as many of you guys know in the Treasury practice, it's not just one subsidiary, but it's a group of subsidiaries. And even though we did 3 acquisitions, in the last couple of months, and that was almost 50 new legal entities that we were acquiring. And the important part of why I'm mentioning this is the fact that it really goes back to a lot of the other slides. Once we do acquire a company, you often hear about, hey, we acquired, LinkedIn and Skype and, GitHub and a variety of gaming studios. And many companies, once they do acquisitions, will sometimes let their, the Treasury functions or let that Treasury practice run independently. At Microsoft, we've always kind of made the strategic decision to do an integration, mostly just because, the economies of scale, right? Because we do have a highly centralized Treasury and a lot of the core processes in place, but we would not have been able to scale without having an in-house bank, right? Because we now have a centralized system that can do intercompany lending. It can do the intercompany funding. One of the items that I want to highlight is if you think about all of these subsidiaries needing cash flow on a daily basis, today, we used to execute hundreds of wires to the given month, and one of the items that Sunny was hitting on was the cross-border zero balance account structure, right? Everybody's using a ZBA structure, but we really took it to the next level by doing cross-company, cross-border flows, to be able to fund legal entities from our in-house cash center. So today we have about 1,300 global bank accounts, and it's a little over that, but there's over 700 of those that are automatically funding, which means we're automatically sweeping funds from our subsidiaries. We're automatically funding our subsidiaries. And this has really allowed us to be able to have that economy of scale with our subsidiaries. The other thing I want to highlight here is some RPA processes that we started implementing as well. So not oftentimes with, and this is an example that we did with LinkedIn where, the key takeaway that I want to highlight is the fact that we were on SAP and LinkedIn was on Oracle. And oftentimes you're limited by your ERP system on how you can, transmit data to and from each other. But what I really wanted to highlight here was the fact that we implemented a robotic process automation, which really, if you think about the bank statements and the intercompany loans, your in-house cash center, effectively is a glorified intercompany loan. So that you have these statements, and the SAP will generate a statement at the end of the day. And we have a lot of this information, fed directly, via automated email job that gets sent directly to the LinkedIn staff. And we were able to just create an RPA process that would look at the bank statement activity and then automatically post it to their general ledger system. And this is incredibly powerful because it allows us to be able to ensure that activity in our ERP system is properly posting in theirs. And because we're able to do that, we can now set up the subsidiaries on, zero balance account structures and automated funding and clearing all of their intercompany within SAP, which has allowed us to significantly, automate some of our prior flows. The other thing I wanted to hit on in the last two slides was the fact that when we did this and when we did in-house bank, it's been a journey, right? This is not something that, if you think about our technology digital transformation at Microsoft, this wasn't something that we immediately did on day one, but it's been something, and it's been a conscious effort on how we have thought about optimizing our structure over, the last 20 years. And it really starts, foundationally, it starts, with us getting visibility to the cash. So today, even within our in-house bank, we are a member of SWIFT, and we have all of our bank statements being fed directly through us. And this is kind of the life cycle of the dollar, kind of those payments where first we just focus on the visibility, then we were focused on, processing payments, and then moving to XML. And now we're looking at SWIFT GPI and APIs like many of you guys. But why I wanted to highlight this is this has really allowed us to be able to have, by having the visibility to our bank statement data, and then being able to take the information that we then have in our intercompany loans, which are held in our in-house bank. We also do have a variety of applications that we host. A lot of our own treasury applications we've decided to create in-house. And so we also leverage a lot of our own data and feed it into a data lake. And here's just a simple mock-up of how we look at cash. And because we have data, all of our bank statement data and activity that's sitting in SAP and data that's sitting in other tools, by taking all of this data and then pulling this into a centralized data lake, the ability for us to be able to answer those real-time questions are incredibly important and incredibly powerful, right? So if you hear about a bank that's, in the headlines, or a currency, or a country risk, right? Today, if we had to go back and pull data, it would sometimes take us a little bit of time in order to pull the data. Like, what's the cash balance? What's the, and now what we actually have are real-time dashboards that we can refresh in a matter of seconds. And if you think about, the cash, most of you guys, fundamental to any treasury team is doing cash concentration, right? The first thing of every treasury analyst is to come in every morning and, it's kind of the old saying, it's like, show me the money, right? Tell us where the money is in each of the specific markets, right? By having so much of this data, we basically have been able to cut hours and hours out of the process. So now if anybody on the team wanted to come in and see, hey, how much money are we holding in any geography around the world, it literally takes us 15 seconds to update. And so this has been incredibly powerful for us because now you can have your very important limited treasury staff be able to focus on more value-added activity. And so this was just important for us because I wanted to highlight the in-house bank is great, but then you still have to be able to take this information and do do something with it. So that's what I wanted to kind of share with many of you guys today on how we were leveraging some of our activity with the in-house bank.
Great. Do we have another polling question? Yep,
we
Christine.
do, yeah. So thank you, Jim. That was fascinating. Which of the following best characterizes your current intercompany netting and settlements process? Do you have minimal intercompany netting with physical multilateral gross cash settlement? This is like a tongue twister for me, this whole poll. Do you have some intercompany netting with physical multilateral net cash settlement? Extensive intercompany netting with physical multilateral net cash settlement, extensive intercompany with single bilateral net cash settlement, or extensive intercompany netting, primarily book settlement. So I think
that is a complex set of options there.
But one of the things that I think that it illustrates is just the complexity of the work that goes on in any treasury organization, and the larger your organization, the more complex things get, and just how much having the data available automatically really can help shave hours off of your time. And it's amazing how much Treasury teams still rely on spreadsheets and things like that, and that like anything we can do to alleviate the burden on your team is useful with technology. So, what are some of the? Sorry,
yeah, this is definitely one of the areas where we see the largest, some of the largest gains in efficiency for organizations when they move to an in-house banking structure and utilize SAP's in-house cash because of the efficiencies. And I'll talk a little bit about this more in the next few slides, but interested to see what people respond here. We do still see a lot of inefficiency in the marketplace in what individual organizations, how they're handling settlement. They're doing a lot more cash and physical settlements, where we're seeing now the opportunities to really move away from that, and what Microsoft is absolutely doing, moving away from that.
And Jim, Sonny, do you have a favorite?
Well, what I was actually going to say, maybe adding on to that for just a second, right, is since we do acquire a lot of companies, it's one of the things that we see is, to be honest, like, as most respectfully, it's like when we come in, we're usually cleaning it up. And so what you find is a lot of the companies will, for a lot of their own intercompany, they're not necessarily recording them as intercompany loans, right? They're keeping a lot of this activity as intercompany ARAP. And it's often challenging because for many of them, right, it works well in the markets where you can, where there's limited capital controls, where you can freely move money in and out of a country, or you can do intercompany lending, and for some of them that does work. But what often happens is that with a lot of the companies that we acquire is they'll have activity in a lot of the restricted markets around the globe where you can't necessarily do the same sort of intercompany netting. And I think it's something that they definitely gloss over, right? And so the first thing that we look at is we partner very closely with our accounting teams and others to clean it up, to make sure that we're complying with intercompany netting rules and what we can do. And there are some of them where, yes, I would love it if we could settle everything with a non-cash transaction through our in-house bank, but there are some of them where, we do need to physically cash settle. Like many of you, the corporates out there, there's markets where you physically have to cash settle. And, at least by having an in-house bank, you're able to cash settle or be able to wire on behalf of, a particular legal entity versus having, wires, just, a significant amount of wires going, around.
Absolutely. Okay, well, let's take a look at what people's responses were. So minimal intercompany netting with a physical multilateral gross cash settlement is at 25%. And then we have extensive intercompany with single bilateral net cash settlement. Oh, and the
nice to see people taking advantage of that.
Yeah, that's good. But I imagine that changes quite frequently, as you said. It's important to stay connected with your accounting department on all these and the rules.
Yeah, for sure. And you do still see that you have minimal intercompany netting with cash settlement as still being a substantial portion of the market. So I appreciate it. I'm going to now take many of the things that Jim and Sonny talked about and try and tie them in a bit more into what we see as being kind of unique, and how that ties into how other companies, how Microsoft took their approach, how other companies we see taking the approach to achieving optimization with an in-house banking structure. So when we look at their original implementation, their implementation was of a single European in-house bank. They called it In-House Cash Center, IHCC. And the affiliates that were engaged were affiliates from around the world, including U.S. entities. U.S. entities participated directly in the European in-house bank center. With that model, and that model is fine, and I think because in the early days Microsoft was still breaking ground, this whole model of in-house banking had only been around for a few years where any organizations were doing that, and Microsoft was on the leading edge. And so they were still trying to figure out and feel out what is going to be the optimal model. And at the time, a single bank area with all the participants participating in that bank area or in-house cash center, in SAP they're called in-house bank areas, but that model was fine. Now, the one downside to that at the time was, as was discussed, U.S. entities really can't borrow from a foreign in-house bank because you lead to a deemed dividend where you would have to recognize that revenue in the United States and pay taxes on it. And so we were cash settling those U.S. entities. They would participate in activities throughout the month, but we would cash settle them before the end of the month, meaning that we had to make physical payments that otherwise would not have been necessary. So there were efficiencies that we got to take advantage with the in-house bank, but we would cash settle, and that would mean cash flows moving around. Ultimately, when they moved on to the model of the two bank areas, we were able to, and Microsoft was able to achieve much more increased efficiency of leaving non-cash or leaving the balances as non-cash settled. So although their structure where the participants in the U.S. still participated in the European bank area for intercompany settlement activities, and now with their expanded functional POBO activities, they would get their financing, as Jim and Sunny identified, from that U.S. entity. So we would still finance it through a book transfer. And ultimately, the two bank areas, the two bank centers, the U.S. and the international, had a relationship where the U.S. entity would not be overdrawn. They had a existing balance with the European in-house bank center, so they would not end up overdrawn. And that enabled us not to end up having to move cash around nearly as much. So the affiliates would ultimately hold their loan balance with the U.S. entity, but process activity through the European entity as well. That structure we can do and have done at many other companies where the U.S. entities participate only in their U.S. bank center, and all of their processing activity can get routed up through the bank area owner, through that U.S. bank center, and then passed along to the European bank center. So the U.S. entities don't actually have to hold accounts at the European bank center, but the European bank center would do the processing ultimately on behalf of the U.S. bank center, which is doing it on behalf of the affiliate. At the end of the day, the end result is the same thing. The loan balances are maintained between the affiliates in the U.S. with the U.S. bank area owner, where they can have a borrowing position without settling cash, and the U.S. has a position with the European bank area. So if there is a need to settle in cash, it would only be one relationship between the two bank area headers as opposed to all the affiliates individually having to settle. So there are different models, different structures to be able to take advantage of this, depending on what your particular needs are as an organization. One of the other areas that I think is important to emphasize is that in the structure that Microsoft uses, each participant has a single virtual account. We call them current accounts in SAP. They participate for the most part in their functional currency. So they hold a virtual in-house bank account in their functional currency, unless that's a restricted currency, in which case they would hold another currency, US dollars typically, as the default. But then they process all of their activity, regardless of currency, through that account. And those then are converted to their current account balance or to their current account currency based on current exchange rates. So the exposures are then, once they're processed, are not managed by the affiliate, are not, once they're executed through the virtual bank account, they're converted to their local currency and they no longer have an exposure. Now, this is a model that we see a variety of different solutions in everything from the spectrum of where every participant needs to hold a virtual account in every one of the currencies they want to process in. That's the most extreme on one end. And on the other end, where the most simplified model with a single account per entity. What we see often is somewhere in the middle. We'll see each entity holds one account in their functional currency, and then if they have large volumes of activities in other currencies, then they'll hold accounts in those currencies. But smaller currencies where they don't have much volume, they'll often just run through their local currency account. So again, this is very much an individual per entity, per organization that's implementing an in-house bank to determine what's of value here. One of the reasons we see companies breaking it down and making their affiliates process in a variety of different currencies is when they're trying to hold the affiliates accountable for FX gains and losses, or when they are looking to try and emphasize that the gains and losses in the forecasting of those foreign currency exposures are really pushed down to the local entity. So by having the separate accounts, and the local entity becomes much more responsible for ongoing exposures, the appropriate hedging of those exposures and appropriate forecasting of those exposures. And so with Microsoft, they are certainly obviously managing their exposures, but they're not holding the affiliates nearly as accountable or focused on pushing that FX down to the affiliate level, at least to the best of my understanding. Jim, certainly if I'm not making that clear, then you can clarify. But that is an aspect here where it is a model that's much more streamlined, and it is an extremely effective model that Microsoft has utilized here. And then finally, on this kind of structure-wise, the fact that Microsoft initially was only incorporating entities that were managed on SAP. So they had a single global instance of SAP, and all the entities that participated in the in-house cash, SAP's in-house banking solution, had to be on SAP. Now, as they've continued to grow over the last 15, 20 years, and Jim said, acquiring new entities all the time, it was important for them to be able to scale and expand. And one of the great things about SAP's in-house banking solution is it is extremely scalable, and it doesn't require that the participants are managed on SAP. So as Jim identified, there are exits, there are interface opportunities to be able to connect SAP, output from SAP, to deliver it to other systems, or even to draw information from other ERP systems to allow affiliates that are managed on other platforms to be incorporated into the in-house banking process, and thereby, as Jim identified, into their cash management process and intercompany loans management process, to really consolidate and centralize that visibility and exposures visibility, but while not having to get them immediately onto SAP. So that's a tremendous efficiency opportunity, because as companies, especially acquisitive companies, acquire new companies, new organizations, they aren't able to get them onto SAP right away. They may not even desire to get them onto SAP. And this solution allows us to incorporate them in the in-house bank without having to force them into the SAP environment. So I think there's a lot of efficiencies to be gained there. Ultimately, when we look at the in-house banking, the expansion of their solution over time, their in-house banking has obviously morphed and expanded tremendously. With Jim and his visionary approach over the last decade of really driving the cash management and expanding the functionality. When I go to the next slide, expanding the functionality, the initial implementation was really a core cash management, in-house banking, electronic banking, but it was a narrower scope. As I said, only SAP managed companies, and really the US was not as engaged as the European, but the functionality expanded tremendously over time. So, and we see this often with in-house banking solutions. You don't have to do big bang everything at once. Get in, get the foundation of that cash management where you're going to get the biggest bang for the buck. Automate all those calculations and capture of the movements, which is very tedious for your intercompany sweeps. And then facilitate the intercompany settlements where you're getting the biggest bang for your buck in reduction of external transaction fees. You're minimizing your movement of funds that reduce your access to those funds, so you're losing float. You're moving funds out where they're less accessible and can't be optimized for liquidity management purposes. So keeping all that centralized is a great foundation, and then you can expand on that functionality. As was identified, Microsoft has expanded into POBO extensively, and some robo as well, and we're seeing that as an area, again, that companies see tremendous value. The ability to minimize and rationalize their external bank accounts, to simplify their structure, centralize their payments, streamline their processes so they can have greater control, minimize the risk of fraud, increase their visibility to their liquidity, their foreign currency exposures. So this is definitely a great opportunity to optimize and increase efficiency in those solutions, in those aspects, those processes. The other thing was initially, when the solution was implemented, the intercompany settlement process was a largely manual process. Even when we went to SAP, what would happen is each entity pair, affiliate pair, would identify their intercompany balance in total per currency. Then it would be put into a spreadsheet and loaded into the in-house banking solution in summary form. Now, what that gave Microsoft was the ability to centralize all that visibility and to process all the settlements directly in a much more efficient manner. As I remember when we presented this back in 2006 or 7 or something, I remember presenting, and their process went from just entering the wires, and the approval process was 24 man-hours to enter the wires and execute those wires for settlement in that netting process. Over time now, Microsoft has moved more and more to a cashless settlement, and only where it was required, as Jim identified. It's a perfect world where you wouldn't have to cash settle. There are many countries where there are restrictions on currencies and countries where there are requirements that there be physical settlement, where they can't hold loans or where they cannot hold certain types of balances with certain types of relationships. And in those cases, you have to cash settle. But Microsoft's really moved to the model where it's all book settlement unless it's absolutely required. And that has helped them to, again, keep the funds centralized, to minimize the amount of cash and liquidity that's sitting out there in a variety of bank accounts, less optimally invested or utilized across the organization. So their market-leading model of the just-in-time funding that's cross-border, cross-company, cross-bank is definitely cutting edge. And by doing that and incorporating all that with the back end of the in-house bank to automate all of the accounting, they are able to achieve tremendous efficiencies in their model. So all of those things together, again, Microsoft definitely market leading in their thought, their strategy, their approach. They're constantly winning awards and getting recognition for their for the solutions that they've delivered under Jim. And I think there is tremendous amount to be learned here for other organizations where they could take advantage of these same types of opportunities in the future. So that's it from a summary perspective overview. I'd like to just give a quick discussion about path forward. So we have these webinars. We've been running these for this entire year. We had a few different series on different topics: in-house banking, cash management, payments. So we have a number of webinars that were recorded previously that are available on our website. We have upcoming webinars that will continue in this series. As a matter of fact, Estee Lauder was another big in-house banking cash management implementation. They are going to be presenting with us either next week or the week after, but you can go to our website and find that information. So we look forward to that, another insightful discussion with client experience. And theirs is definitely a little bit different than Microsoft's in their landscape and what other platforms they use. They use a non-SAP Treasury platform as well. And again, there's some historic webinars out there. These are just a couple out there that to reference, but our website has a lot of webinar decks and live webinars to listen to. So we invite you to take a look there and certainly contact us if you have any questions or feel that you'd like some additional insight, and we would welcome the opportunity to talk with you about how we might be able to be of service in helping you to look at in-house banking or other solutions.
Yeah.
So
great.
I think that's pretty much it. We move on to some questions, and there are actually a few minutes left for some questions.
Yeah. Very good, guys. Way to stay on time. So we have a couple of questions from the audience. So for Jim and Sunny, for your payments on behalf, how do you solve the problem of rejected payments from your subsidiaries?
You mean when a payment is failed and it's generated by the pay on behalf entities, the normal process will happen, meaning we will get notification by the bank, and because each payment is linked between the pay on behalf entity and then the local subsidiaries, so it will also be automatically withdrawn from the paying entity from the in-house care center. So everything will reset until we reprocess the payment.
Okay, great. Okay, Jim, did you have anything you wanted to add to that, or? No, you're good. Okay. All right, so another question from the audience. Does your POBO process support all subsidiary payments or just certain ones, such as large and or cross-border payments?
Right now, it's mainly on the Western Europe region. We continuously look for opportunity to expand these functions. And we actually recently expanded this to a Singapore entity. So we're statutory allowed, we will work with our SAP engineer to prioritize the country list and continue to implement. And one thing that I would like to make note is the pay on behalf is mainly on the account payable payments. We don't do pay on behalf for payroll.
Okay. Very good.
And, I'd like to add just a little bit there. I mean, that's very insightful information, again, about the way that Microsoft's modeling their structure. And we do see a tremendous variety of different models for that. So up until recently, I guess a project or two ago, I hadn't seen any company that really used in-house bank for payroll. But we did then have a large organization that incorporated their payroll into the in-house banking structure. Many companies have, prior to that, had said that they were concerned about, again, tax and legal implications of processing that way, but we have had companies that have done that. Additionally, on the POBO in general, we have some companies that have implemented an in-house bank where local payments continue to be made by the local affiliate, and the in-house bank was really used for foreign currency and cross-border payments. And this was intended primarily to emphasize the value in consolidating the foreign currency settlement requirements, to getting aggregates, to get economies of scale on their processing, and to minimize the number of foreign currency accounts that needed to be managed by different entities. So there are tremendous variety of structures and approaches to managing this. Microsoft has definitely taken one of the more comprehensive approaches of really processing all payments this way, unless there is a specific requirement to do so otherwise. And that is definitely, I'd say, when you look at optimal models, that's definitely that gets you to the closest on optimization.
That's great. Okay, we have a couple more questions then. This gets a little more specific. So does Microsoft integrate Canadian or Mexican subsidiaries into their in-house bank structure? And if so, to what extent are they integrated? So.
Sure. So I could take that. So we do actually have them both highly integrated within the in-house cash center. So for Mexico specifically, there are limited capital controls, and they're allowed to do intercompany lending. So we would consider them a full participant, which means that they take advantage of being able to do intercompany lending, the non-cash intercompany settlements, the zero balance account funding. And so Mexico by itself, we're good there. Canada was really considered a full participant until about 2 or 3 years ago. And there were rules within Canada that would then restrict, there were some, they tightened some of the intercompany lending rules that a Canadian legal entity, a resident entity, is not allowed to loan cash to a non-resident entity. Otherwise, that could be considered, a kind of a deemed dividend. And so we actually have them, but they can borrow. So they can lend, but they can't lend, but they can borrow. So it really depends on the type of legal entities that you have. We are constantly reviewing the capital structure for all of our Canadian entities. So we do use the in-house cash center to net intercompany, to clear some of the intercompany. But we do have a process at fiscal month end where we physically need to cash settle. We'll have them do that. We'll either execute a wire, or we actually do have many of our Canadian legal entities on a zero balance account structure where we'll have them pull funds from us. And so it is something that we're constantly reevaluating to figure out what's the best method, because for us across Canada, we have a variety of sales and marketing entities, gaming studios, data center entities, a limited risk distributor entity. So each entity has its own unique complications when it comes to cash flows that are just fun to settle.
Sure. And I'm sure
I would just add one question. I know we're really pretty much out of time. Just one comment to that Jim mentioned is the level of participation. One of the things that we see companies often think about is that either an entity can participate or can't participate in in-house bank. And that's a very rigid view of it. What we find is there are shades of or levels of participation. And this is definitely where we've helped clients to take advantage of incorporating entities for efficiency where they could be incorporated. As Jim said, sometimes sometimes they can do the netting and they have to cash settle, but at least you get the efficiency of the automation of netting end to end, and then they have to cash settle, but that's a substantial gain from processing. Sometimes they can involve it with POBO, but again, they have to cash settle, but still efficiencies to be gained there. And even with the netting, sometimes companies can't net, they can only gross aggregate AP, gross aggregate AR, and you have to settle those, but still substantial opportunities to increase efficiency. So analyzing each company at that level, determining what level they can participate at, I think there's many opportunities to bring more companies in where often companies, organizations think that they just can or can't participate, and really you have to look much more granularly.
Hey, Peter, just one thing to add on that. So we're in we have a physical office in 118 countries, and there's only one of them that's not in our in-house bank.
Wow.
Okay, awesome. So that's a great commentary on the opportunity to incorporate those companies into this solution. So we definitely see that there are tax and legal is often going to push back, and the Treasury Department really has to push back on them and say, show me why this isn't possible, because we do see organizations like Microsoft taking advantage of this on a broad scale, and organizations are missing out if they don't do that.
Yeah, that's great. Okay, well, thank you very much.
I was going to say, Christine, I know we're up against time, and there were a couple in the chat.
Do you want to take some more?
Feel free to just email Sunny or I. Happy to talk about this offline.
Absolutely.
That's great. We greatly appreciate Jim, Sunny, greatly appreciate your participation and your insightful commentary. It is extremely helpful information. I know we talk to companies all the time that are looking to understand how are leaders in the marketplace doing it, and you are absolutely a leader in this 100%. Marketplace. So terrific stuff. Thanks, Jim. Thank you, Sunny. Thank you, everyone, for attending and joining. Sorry we ran over. And please feel free to reach out to us as well if there's any way we can be of help, or go to our website, the landing page. It gives you a lot of other material to look at other companies, other scope, functionality, capabilities, etc., and join us in the future. We appreciate your attendance.
Yes, we look forward to seeing you. Take care. Thank you very much.
Thanks, everyone.
Bye.
Have a great day. Bye.